Hi, I'm Andrew Overman at Location, and he's...
Michael Webb from Mortgage Republic.
We need to speed that up, don't we? We need to get that transition between us. Each week, we answer your mortgage-related and finance-related questions back into the estate agency world. And we've been really humbled by the volume of people that have been messaging in. And this week's question comes from Amanda, who says, why visit an independent broker before applying for a mortgage? And actually, Michael, I'd go one stage further than that. I would say, why visit an independent broker before even setting foot into a house to view a property? But the question that came in was, why visit an independent broker before applying for a mortgage? Over to you, my friend.
Yeah, excellent. So I'm going to avoid the word independent because the FCA don't like that anymore, if I'm honest. So let's just put that out there. I would say a whole of market broker, and that can also have different meanings, in all honesty. So maybe we'll do a video on that in future weeks, on the lovely names that everyone can have and what that can actually mean. But we'll just use mortgage broker, whole of market broker, and assume the overriding kind of meaning of that. Now, the reason you'd want to do that as early as possible. So we always like to speak to, particularly if we look at first-time buyers or people moving house, for example, a first-time buyer, their first port of call should be a mortgage broker to properly establish, not just by going on Halifax's online affordability calculator and putting in what you think the numbers should be. You should really spend some time with a broker establishing your true affordability and what the mortgage may cost, obviously the overall costs of some of the decisions you may make, because a lot of people come to us and say, I want to do a first 5-year mortgage, when a 25-year mortgage is more than affordable and they're paying an extra 10 years worth of interest. That's horrendous money, absolutely horrendous money. So establishing that early on will do a couple of things. It will show, for a first-time buyer, it will show an estate agent that you're serious and that you're a sensible individual who has established that you can afford this property. Okay. It will also, as a home mover, it will establish that you can actually do what you're looking to do. And as a home mover, I've seen it numerous times over the years where people have assumed they've got a mortgage so they can get another one. They get the house on the market, they sell their property, they agree a price on their new one. They then engage a mortgage broker to find out that the CCJs they had a couple of years ago, or the bankruptcy, or the whatever's there, or the fact that since they bought the house, they've taken out 5 new loans and got 3 more children, has made what they want to do completely unaffordable. And in the nicest possible way, they've just wasted the time of the person buying their house and of the person whose house they want to buy, because they're unable to move. So really establishing the finances should be the first thing you do before you even engage and instruct an estate agent.
And in fairness, when I go to an appraisal and I visit somebody's property and they're considering selling, one of the first questions that we get to when we're getting through the nitty gritty and the finances, have you established with your mortgage company or a broker that you are able to move? Because situations are fluid, aren't they? If I look at myself, when I first took out a mortgage, I had no children. When I came to remortgage, I had 2 children over the, a 5-year fixed rate period. Most recently, I've become a director of a company, a limited company. So that's changed the mortgage landscape for myself. So it's absolutely critical that if you're inviting an agent out to value your home, you dovetail that with getting the appropriate mortgage advice.
Very much so. And I think you're right that the valuation and the mortgage advice kind of needs to go hand in hand, because a lot of what some of the numbers the mortgage advisor broker is going to need are going to be provided by the estate agents. So i.e. what you feel you can realistically sell the property for, what the kind of fees involved for doing that are going to be. And they're going to vary massively estate agent to estate agent and geography wise. So yeah, overall, that would be the right thing to do, is to have a market appraisal and dovetail that in with a mortgage appointment with a broker, for sure. Now,
and what kind of information will people ask for, Michael? If yourself, for example, a very skilled mortgage broker, I'm coming to you as a home mover or a first-time buyer. What are you going to want to see from me to establish whether I can essentially A, afford, and B, obtain a mortgage?
Yeah, of course. So very typically, we would ask people to bring to a first appointment their last 4 months pay slips, their last 4 months bank statements, and access to their credit files via one of the free kind of systems that's out there, or there's ones that aren't free, but you can get them for free for 30 days, whichever. Check My File is one that we kind of recommend because it gives all free credit agencies. So you can see the difference of what's recorded across all three in the UK. And yeah, we would want those so we can actually see pay slips, we can actually see bank statements, we can address issues up front, and give advice as well at that point, and maybe then help people get that plan of attack in, because there's things, believe it or not, that might be on your bank statements that you don't think will be a problem, but will be a massive problem for getting a mortgage. So, for example, one of the, I give a couple of examples of bank statement issues. So regular payments into betting companies is going to cause you a problem. Okay. So if you're betting on football 3 or 4 times a week, irrelevant of your win-lose ratio, they don't care. That will, 1, be classed as a commitment, and 2, go into kind of an assessment of a psychological behavior that may well prevent you from paying a mortgage in future. And very regularly, if that is occurring, then mortgages are declined. Okay.
So top tip there is to draw the money out in cash and go and put the bet on it.
But again, if you're continually drawing out money in cash, they're going to ask where that money's being spent. Your bank statements are analysed. If the lender asks for bank statements, it's because they want to analyse your spending and your spending habits. Okay. And then put those spending habits against their modelled affordability. And if it's outside, then you could find that they either decline to lend at all, or they reduce the amount they're willing to lend you. So, but if we can see this
criteria,
yeah, lenders will typically ask for 3 or 4 months bank statements. Okay. So if we can see this, we can advise you up front, and we can start to stage things to say, well, look, you need to stop this behavior. As much as a school teacher kind of saying as that may sound, but you need to stop this for a period of time until you've got your mortgage. Yeah. And we're going to need to see 3 months. It's things like, so I'll give you a really good example. And I'm going back a couple of years. We had some first-time buyers with their bank statements, and they had a direct debit for £200 going to their Help to Buy ISA. They kept that in place because obviously they were getting 25% bonus on it. But for 2 of the last 3 months, that sent them overdrawn. Okay, by £100. Now they could they could have stopped it and not gone overdrawn, but the lender said they were applying for a Help to Buy new build thing. They said that their criterion said that if they had gone overdrawn at all in the last 3 months, they could not lend. So it was declined on the basis that the lender said, come back to us with 3 months of it not happening. So we were able to kind of say, look, we're not going to go to the lender now. We're going to need you to address this, and then we can present what the lender wants to see. And then you don't waste a valuation fee to find that out. So you can manage it. If you're working with a competent broker, they should be reading your bank statements, and all of that. Couple of other bank statement tips for anyone. Be very careful what you put as the reference for payments. It's like faster payments you're sending to friends and family. Okay. I've had 3 cases in my time as a broker over, I've been a broker for over 15 years, but these are within the last 5 years when it's been really, really monitored. I've had 3 cases pulled for like further investigation because the reference for just £100 transfer has triggered like one triggered a terrorism check. Yeah, I'm not even kidding. There's been some funny ones, like some people going on holiday to Thailand and their part of the deposit was transferred as Bangkok Chick Boy Fund. Now, that also got pulled. And then we've had other ones that are just humorous, but they're being read. And if they trigger some form of, like I say, one triggered terrorism check on the individual because of what he'd put, just as and it was completely innocent. It was sending like his dad a repayment for something that his dad had paid for. And he'd just put a funny reference. What he thought was funny, what the bank thought was a danger. So be very, very careful with that, because I'm not joking. That held up a mortgage application for over 90 days.
Crikey. As always, Michael, great advice. And the best advice that we can give as an agent and as a mortgage broker is get your ducks in a row when you're determining the value of your home, or when you're first starting out as first-time buyers. Speak to an agent if applicable. More importantly, speak to a mortgage broker. Make sure the two processes dovetail and that the affordability and the practicality is there, so that you're not wasting not just your own time, but other people's as well, particularly if you're in a chain scenario. I'm Andrew Overman and he's Michael Webb, and together we present Mortgage Matters to you each week. Thank you for your time. Thank you for watching.
Thanks, Andrew.